was weird. All right, well, we can get going whenever. Welcome back to Romberg and the Money, your weekly rambling stock market rundown where we, your hapless hosts, discuss current events and spread wild conjecture in an ever-shifting market. We are rank amateurs. Every word we say is the opposite of financial advice and should be completely disregarded. Romberg is not for everyone. Please consult with your financial advisor to see if you are healthy enough for Romberg. All right, well, it is Friday, June 18th. Beautiful sunny day here in Washington. However, not so sunny day for our stock market.
Yeah, today was not a fun day. I always enjoy my fun days, but you can't laugh unless you've cried to understand how.
As we were saying right before the show, you need downturns to have a room for opportunity.
All right, totally. And as long as our trends are still intact and still running in the right directions, I am good. In fact, I made some position additions today.
I was saying now, I was actually thinking, I'm like, well, I still like these stocks long term. I might as well buy them while they're on discount.
Yeah. So I've got this. So today, this whole week has been about the Fed, right? Everything's about the Fed and inflation.
You're real quiet right now.
I'm sorry. Hold on. I was worried because we have, for some reason, the gardeners are roaring by my facility. Can you hear them?
Yeah, I can.
I wish they would garden some of my stock portfolio for me and make it grow better.
Yeah,
I would like that.
I don't trust people that do landscaping for that.
Yeah. So if it becomes too annoying, I guess we'll have to maybe redo this. But
it's not that bad. It's just kind of a buzzing in the background.
All right. Well, anyway, so as I was saying, this week has been, I'll call it it's the week of confusion. What's going on? I don't understand. It's kind of weird too because, so the Fed chair comes out and says, well, from my perspective, he didn't say much of anything other than we're going to keep doing what we're doing, that we're going to make some corrections soon, sometime in the future.
I was going to say, yeah, they said it was like, what, 0.36, 0.6? I don't know what the number was.
I'm just sitting there listening. I'm like, okay, fine. So you're going to keep policy kind of the way it is for now, and maybe in 2022, maybe late in 22, or maybe 23, I don't know. Somewhere along there, you're going to do something. So, you wonder, okay.
Well, okay, if I had to posit, the psychological reasoning behind this, it's that there had been this baked-in expectation that the Fed was either had this under control or was going to get this under control. And then this announcement, everyone was like, oh, they have no idea what they're doing.
Well,
that's my take, is we had baked in this expectation of competence. Or not even competence, just that there was going to be change X, and that didn't happen, and that's where the drop comes from.
Well, okay, but here's the bigger picture in my mind.
Yeah.
So these kinds of all right. So we already ran through in previous episodes the concepts of what does inflation do to cause equities to decline, right?
Right.
But there's another issue. I always sit there and I listen to all this stuff, and I'm like, well, okay, I got to hurry up and take my money out of equities because inflation might erode some of their margin. So I'm going to take all my money out now, and what am I going to do with it?
Well, exactly. You're going to keep it in cash where you're degrading faster.
Put it under the bed?
No.
If I put it under the bed and we have 4% inflation, I'm going to lose 4% every month anyway. Or every year.
Thank God it's not per month.
I'm still going to lose the money, right? I'll lose it either in the market or I'll lose it sitting in a bank account. Who pays you what amount of interest every month? Oh, yeah, none. So what are you going to do with your money? You lose anyway. All this does is cause people to trade. And when people trade, a good number of them lose.
The majority, I think, technically speaking. Probably
more than win, right? So everyone runs out of financials because, well, my God, the yield curve is getting close to, it's almost flat. So if there's no yield curve, the banks can't make any money. Oh, okay. So what's the Fed going to do? Oh, well, the Fed is going to raise rates. Oh, really? And if they do, what'll that do? It'll invert the yield curve. You think the Fed is going to raise rates and invert the yield curve on purpose? No, they are not. That would be way worse than what they have now. So, I mean, it's crazy. So all these people are selling their banks and moving out of their financials, and which is awesome because guess what I get to do? I get to buy some more.
Buy at a discount. I was gonna say I definitely haven't made any trades, like especially sales, based on this week. I don't think it's a lasting downtrend. I think it is kind of an emotional gut response from people who didn't know what they were doing long term.
So what do you want to do here? I mean, let me show you. I'm gonna toggle you to the doom,
The doom.
the
What's the
doom,
doom?
the
Is this VIX?
doom of the of the triple leveraged financial, which is interesting. A lot of the talking heads are talking about Goldman Sachs and Chase, and here's some great opportunities. And yet at the same time, while they're all selling off, a lot of the talking heads on investment are like, that's where we should go. So there you go. There is the doom right
Hello,
here. It just
Cliff.
shonk right there, right there. Just blew off, gap down.
So for those of us who pay attention to our shot calls, we lost badly this week.
Yes, yes, both of us are totally off the rails on this, but you know, that's a very good point to make, right? You
Yeah.
can't always get it right. If you
Well, yeah,
did,
especially on a week-to-week basis. I mean, it was always kind of a joke because like how nobody predicts that, but you can kind of trace the
yeah,
slope on this, but you're
yeah.
not gonna be able to find that day-to-day change.
This whole thing probably stemmed from um, so from my perspective, the Fed is we have mixed messages. We have one guy coming out, we have the chair coming out and saying one thing, and you get a little bit of this activity, and then you get another Fed um, um, one of the other Fed members from another region stepping out and going, oh yeah, by the way, you know, I mean, I don't know what they're doing, but if they're going to have a consistent policy, they should have a consistent message, at least relatively, instead of them all coming out and saying different things. So it makes it confusing for the markets to kind of grasp what they're talking about. And the interesting thing is, right, a couple of weeks ago, everyone was like, financials is where and it's like Green Acres. Financials is the place to be. Money is the place to be. Anyway, and then and growth stocks uh, in the tech sector are out of favor, and that well maybe we should all be out here. I just don't like listening. I like to listen to talking heads because I like to listen to the divergent logic that I sometimes hear. Get out, get out, get out of growth. You got to move over here to the rotation. You know what happens when things rotate, by the way? People buy into sector rotation concepts. People like you and me.
Hmm.
We're the tail of the dog. The
Well, that's
sector
why I was
rotation
just
already happened by the time
while
they
you
tell
were saying
people to do
this,
it.
all I was thinking was like, buy on rumor, sell on news.
Yeah, right.
Because as soon as the general population starts talking about something, that is a good sign that it has reached, peak saturation. And if there's not more interest, more money to get driven into there, it's not going to keep going up. And if it's not going
Well,
up, it's going down.
and a lot of people are saying, well, there's some of the talking heads are talking about how we've reached that that the recovery story, the opening story, if you will, the opening stock opportunities, the reopening, is already pretty much done. It's pretty mature. All of the all of the everything's baked into the cake now.
I would almost agree with that. I don't know.
Well,
What's your
the only
take?
well, So some of them maybe the restaurants are doing really good, and maybe some of the other retail or services industries are doing sort of good. But what about the credit card companies? What about MasterCard? And what about the banks, the Chase, the people that have Amex for example? I mean, have they really started? Have they started really showing recovery yet?
Well, I think this is kind
Because
of what we were talking about last week, where it's not about facts. It's not about how is the money moving. It's about the perception. And
yeah,
the perception is that the opening has happened. Everyone's like, okay, we're back to stability. And so, they're not really looking at those fundamentals. Like that's my argument. I'm not going to name drop a stock here, but that's my argument behind some of the stocks that I'm still holding that had kind of a rough week, because it's just I don't I'm not in them for a short-term
yeah.
play. I think that the long term they're doing well. I'm going to keep holding them.
I was listening to another person who I respect today. He was talking about Nvidia and and how he was well versed in the company. He knew what they were about. He knew where they were going. He believed that in his investment theory that they were going. And his theory is based on a lot of data. It wasn't just a good feeling, but
Hmm.
there was a long way for the company to go. And he was commenting about um, how many times over that stock's history that he's been holding it, um, that there's been 20 and 30% drawdowns or corrections for people who don't understand drawdowns, but that
20 to
his
30% discounts for buying more stock.
well, so yeah, so he was going, so he would own it at 10,000, and then a week later it might be 6,000, but he didn't sell. He didn't get scared. He didn't run away because he had the story, and he understood the future of the company and what opportunities that it
Right.
was that it had in front of it, and it had good management. So
I think so much of
all
it is mindset. Like,
yeah,
people see the number dropping and you're like,
right,
I'm losing money. I need to get out of this.
right.
And the other mindset is, oh, goody. Like, I thought it was a good deal when it was $10,000 and now it's six. This is fantastic news.
Right. So all in how you look at it, and the end of his story was that he's still holding it today, and in 5 years, or I think it was around 5 years, he made about 1,200%. So, you know, um, it's just something that stuck with me today when I was listening to it because uh, don't get me wrong, there's always a time to get out. You know me,
Right.
I'm big on
Right.
stop losses, right? If I literally owned the fast outright, um, I would have probably been out uh, somewhere right here. I would have probably had a
Somewhere
stop
in the
loss.
middle of that day, you'd have been like, oh, no, no, thank you.
Well, 109 would have been a stop loss, and it would have been predicated. I mean, that would have been a worst case. I don't know if you see these ATR averaged. These are ATR stops. I use these little dots up here.
Yeah.
Oh, those are average true range stops. They are kind of like reverse these ideas of reversal,
Hmm.
where if the stock drops uh, over its normal trading range for a period of a window, um, and the drop is negative, then it's probably going to head down. And usually, um, I'll wait a day. So like right here's the first one. Let me drill in on this a little bit. So right here was the first day, and normally I would wait one day because sometimes these will they're kind of like false signals, so I'll hold a day.
Yeah.
And that hold right there said, well, maybe it's not going to continue. But in this case, the follow-on day corrected it. It kept rolling. So I would have been out right here. I would have been out this day
Yeah. I mean, that would have
if
been a good place to be out.
I literally owned it,
Yeah.
because I have no idea where this decline, while my average true range is failing, I would have been out here, and then I would have been like, oh my God, the next day, did I mess up? Did I mess up?
No.
No, I didn't mess up. And I would probably wait. And here's a good example down here.
Look at the air
Uh,
gap on Friday. Like this.
A good example down here is I would have been out. See, here's one where
Yeah,
it changed. It
what
changed.
is
There's
it?
a
Bear
reversal.
trap, I think they're called.
Yep. And then a bear trap. Yeah. And then it came back in. And it's like, well, wait a minute. And then, so I wouldn't have traded that day because it was a green day and it was the day after. And then comes another negative day. Again, I have to wait another day because I'm still in this window, this zone.
On the channel, yeah.
And so the next day, off we go, and you see it reversed. Your ATR reversal shows up, and off you go. That was kind of these are hard to decide what to do, and sometimes I do nothing. But a lot of times in this condition, I would have came in here and said, well, here's a good day. I'm going to come right back in here at the bottom of that great day somewhere, and I'm going to set a new stop up in case the next day crashes down. And if it doesn't, then good. As long as I stay above that stop, I'll ride it. I just love stops. I just have to love them as a trader because I know where. So when they do stop out, by the way, they don't always stop you out.
I was just gonna bring this up. I'm like, your stop loss is not the guaranteed price it's gonna execute at.
Right. But this isn't the normal condition that you'd run these out in either. So
it's still gonna be better than just eating it if you're the kind of person who's worried about like, oh, I want to not be holding it while it drops.
Right. So anyway, but again, you could look at any of these and use them as guidances. They're not absolute. You have to make some sort of a call somewhere to decide to do something. Or you could look at the long-term channel that we got here. You know, I got one standard deviation running for 5 years. And you can say, you know what, I don't care. I'm in the channel. It's going to go up and down between the top and the bottom, top and the bottom, top and the bottom. And I'll just stay here and it'll all work itself out.
I think that's even more of a thing for younger investors such as myself. I'm going to pretend I'm young still. In that, you know, you don't like the day-to-day trade. It doesn't matter. You're not holding it to retire next year. You know, if you're looking at it on like a 30+ year time frame, you know, that those day-to-day wiggles are not what you need to be worrying about.
Right. But I don't know who's watching, so I don't know if we have traders watching or if we have investors watching. It'd be nice to know because we could roll that. We talked about going down.
I think it's good to talk about both because I think people kind of do both in a way. Like you're going to be open to both kinds of plays, or you know, I don't know. I just think it's instead of pigeonholing, it's good to talk about different strategies for the same market.
Yeah. By the way, also in this particular setup, I would have also used this.
That inversion there.
I would have used the crossover here as another indicator supporting. Sometimes I'll use multiple indicators to do the support, and that would have been another indicator for me. These are fairly short term. I mean, that one. Hold on here. What's the? So that's a 15-day, and I believe the other one is a 10-day. So these are a 15 and 10-day moving average. It's not premium, and you can change those around and make them. The shorter you make them, the more radical they'll become. But I like to work in the law of averages, and I don't like to work on a 1 or 2 day a week operation. So, but I will use them as kind of a measure.
A barometer for the weather.
A barometer for the ATR stop.
Yeah.
And then, of course, I always look at the channels. So these also become part of the question. But because I tend to always stay away from purchasing stocks that are below the channel line.
Uh-huh.
I mean, I'm sorry, purchasing the ones that are above. I like to
Okay.
buy them below these channel
Yeah,
lines
once again, this is
somewhere.
a great time to buy.
Yeah, way into the oversold category.
It's a great time to
And
buy long term.
yeah, and but with financials, they're not they operate on somewhat of a different set of rules because there's book values on banks, and there's a lot of other kind of conditions that drive some of what this particular financial ETF represents.
Mm-hmm.
Whereas in tech stocks, they're not driven by financial information as specific as what financials are driven by, right?
Right.
So when
There's
you
more hype in
toggle,
the tech
yeah,
market.
yeah. So when you get back to our friendly TQQs, by the way, who won on this shot call, by the way?
Oh God, neither of us. But if
What?
it's one of us, it's you because you did 115 to 126. Mine was 118 to 124.
Yeah,
So
we're at 110. Yeah. So I guess we all lose.
yeah,
Um,
I mean you're closer, so I'll give you the one on that one.
but well, so just FYI though, I did draw these boxes. I left them here. Um, and it did actually trade inside the box I expected it to trade in. Um, and so I'm holding a lot of positions in this too. And um, but uh, I usually don't carry stops on this particular one unless I have a lot of shares. Right now, I'm just holding on to a lot of short put options. So
Mm,
it's so it was a good window for me to stay
perfect.
in. Yeah, and I think that you're going to see this window elongate a little bit. I do think you're going to see the 115 maybe next week.
Yeah.
So if I'm putting a shot call in right now, I'm going to tell you I'm looking for. I don't even know if I'm going to arrange it. I'm just going to say I'm looking for 115 to 118 for next week.
That just happened. Sorry, one
Yeah.
second. Oh, that's weird. Huh. My sheet just like refreshed while I was looking at it.
Oh, great. That's interesting.
Sorry, what was those numbers again?
115 to 118.
115 to 118.
Yeah. I think
Mr.
we'll go. I think that there's a lot going on in the tech. I mean, honestly, again, back to the same thing. Some of these stocks are not selling at big multiples. Like Apple's not really at a large multiple. Uh, I mean, for what they
Some
are.
of them are selling at infinite multiple.
Well, the ones that are in this particular ETF, not so much.
Yeah.
I mean, Amazon actually isn't really selling at a large multiple comparatively for what it is.
Mhm.
And Amazon, we're going into. I think the thing I worry about with retail, anything having to do with retail, I think there could be some shortage issues which might affect their sales.
I
If
think
you're
you're a little
thinking
late
about
on this news,
something.
Jim. Well, there are shortage issues that have been
Well,
affecting sales.
I know, but by the time you get to Christmas, I don't know if people are thinking about it, but a lot of retailers, Christmas is the only profitable month that they have. I mean, all the money for the first 11 months is in operational costs, and the December month is where they pick up all of their margins, all their profit, all that goes onto the bottom line. So if they have a failure, the failure will express itself in sales numbers in December.
Hmm.
So I mean, there could
Well,
be
that's
some.
interesting. I hadn't really thought about that before.
But I don't invest in retail, so I don't really care. But that was for anyone out there that does. I think that from here though, uh, if if you had if you're trying to put your money in a safe place, that's how I would look at this.
Mm-hmm.
And I'm not talking about the TQQs, mind you. I'm talking about the FANG stocks or equally sized tech companies.
You're talking blue chip tech.
Yeah, blue chip tech. I mean, honestly, in times of trouble, people could go buy gold if they want, or people could do whatever they think. I don't think gold has really moved around that much, and certainly Bitcoin hasn't been the storehouse of wealth. It's falling with all the rest of the financial stuff. And but who's got all the money? I mean, how many billions of dollars is Amazon sitting on? How many billions, hundreds of billions?
We're actually looking at Barrick right now, and Barrick also nosedived. Gold stock ticker.
Yeah, so I mean,
Oh, wait,
I'd rather put my money into a blue chip stock that's got tons of cash. Okay, so maybe they don't go up. Maybe they even adjust in their
They've got
price
a war chest. They don't know how to spend.
Exactly. That's where my money's the safest. It's like a bank. It's like a bank with opportunity, as opposed to a bank that gives you 0.06% interest on a savings account. What?
It's like, so a credit union.
Yeah, right.
A bank
Anyway,
with
so I don't care what anybody says, my lunatic mind says that's where the safety lies for me.
Well,
if that's what I was worried about.
Like these companies, they're not going anywhere, I think my only concern is I don't want one that's getting a lot of social pressure at the moment. Like my concern is the company like Amazon or Alphabet just has a really big target on their back right now, like regulatory from regulators, both here and internationally. And my concern is that at some point, that's going to come back and bite them. So you want to
maybe
I'd be looking for someone that's doing well, but is not currently in the social media eye.
Oh well, okay. I mean, you could do that, but let's look at it from a different perspective.
Mm-hmm.
So Microsoft faced antitrust, right?
Mm-hmm.
Who had the better lawyers?
Clearly Microsoft.
Obviously, because they won, right? All right. So
that's not what I'm talking about. It's that you're looking at periods of instability in the meantime where they are going into these legal suits.
Instability is opportunity.
Fair.
It's not where you. It's where you find fear, and where you find fear, you find instability. But it doesn't necessarily mean anything. Let's just say, theoretically, that they broke up Amazon. Let's say that they came in and said, let's file an antitrust suit. Well, Amazon probably drop in price while they're fighting their way through the system, right?
Right.
But let's just say that they lost and then they got broke up.
Mm-hmm.
So what historically has happened to any American company that was broken up on an antitrust scenario?
I'm no idea, but I'm guessing you're going to tell me it turned out great for them.
It did. So as an example, Rockefeller, Standard Oil, right?
Mm-hmm. Yeah.
When Standard Oil was broken up, and he fought it, and he fought it, and he fought it, and it was like, it's going to be horrible. It's going to be horrible. He ended up even richer than he was before it was broken up. When he had the monopoly, he was rich. But after it was broken up, he became even richer.
Here's a question I have for you. This is asking from a place of ignorance. When a company gets split like that and they roll them off into new corporations or whatever, what happens to, like, do you get partial ownership?
You get pieces of all of them.
Yeah.
Yeah.
It's almost like a 4-for-1 stock split.
Sort of.
A diversified
4-for-1 company split. So what happens is a lot of times, well, what's happened historically, I don't know if that's the case. I would be always advocating against. We're competing on a national stage. 150 years ago, Rockefeller was not competing on a national economic stage. So, I mean, when you look at it from that perspective, Alibaba's way, way bigger than Amazon. And so there are companies out there that have either equal footing on a national scale, international scale, or larger than a lot of the companies in America. So the government doesn't have the best. I mean, they broke up the bell companies, right? They broke up the oil companies. But other than that, I mean, the antitrust department of the U.S. government hasn't really done. They rattle a lot of cages, and Congress could try to do some regulating, I suppose.
Yeah.
But that's about it. What are they going to regulate? Speech. That's really all they have. Short of coming in and trying to tell you can't make a profit on something. I mean, it's like Amazon. It's like the Apple App Store, right? Well, Apple gets a bunch of money from all the app developers. Okay, well, it's their platform, and you don't like that? Well, go to somebody else's platform and develop apps.
It is tricky. I'm not gonna. I feel like that's kind of oversimplifying because like it is complicated when you're putting this in a situation where you just don't have visibility. They have overshadowed their competition to such a degree that you kind of have with a prisoner's dilemma of, like we could leave, but if nobody else leaves, then we're going to fail.
Well, yeah. So you have a dichotomy in a lot of ways. Companies. Well, let's put it this way. Like Starbucks, you pay your $5 for your drink. It probably costs them 10 cents. Nobody's regulating how much money Starbucks makes off of you.
Right. I don't think the profit margin is necessarily the problem.
Well, where I was going to go is, though, that in every company, there is a set of conditions. So if you want technology to advance, you have to spend a lot of money in R&D. Yeah. If you break a company into tiny pieces that doesn't have the capacity to pour the kind of R&D into the space that's required to advance the technology, I mean, that's the anti-argument for me, because how are we going to have a self-driving car in the future if we don't let companies get big enough to make those kinds of R&D investments in things that would never have happened with small companies?
No, 100%. Like you're looking at these things that require just such a substantial amount of capital to achieve. You're looking at, you said self-driving cars. I'm looking at SpaceX. Like these are not things that your mom and pop shops are going to have the wherewithal to tackle.
Exactly. So the only reason the government likes to intervene with business is because they get scared that business might have more power than they have. Of course, they're going to go back and have their hands out to all these same businesses, asking them for money so I can get reelected. I'm going to regulate you, Apple, but could you please donate a couple of $1 million?
Don't forget to donate to my campaign. Otherwise, the people who like you even less than I do will be in charge.
Yeah, exactly. It's a crazy place. We kind of wandered off, but anyway,
Jim, this is going to go down in history as our best episode. I'm telling you right now.
No. So anyway, I think in general, it's a shitty week, and I said a bad word. So sorry.
Oh no, banned from YouTube for sure this time.
But I'll just live by the premise that that we are following our trail, right? The trail upward. TQQs still running up. on the 5-year lines. We're still running up on the 2-year line. We're still running up on the 1-year line. And we're still running up on the short ones, the 6-month and the 3-month. They're still up. So am I a position taker on the TQQs? Yes, I will be. When and where exactly? Somewhere in between those channel lines, I might take the varying positions. And definitely below that channel line, I'm definitely climbing in. So,
all right.
There you go.
Long-term bull from Jim Howe.
I'm not the long-term bull. The market's telling me it's the long-term bull. I don't have to read anything in between those lines.
That's a good way of looking at it. It's, I think a lot of people underestimate just the sheer scale of the stock market and how there are so many fingers on the planchette of this Ouija board that just absolutely dwarf our individual contribution. That you're not moving the needle ever. You are not moving the needle.
No.
But you can ride the bull.
Yeah.
Or the bear. But you're not individually doing anything. It's the sum total of just so much money moving so quickly, usually by computers.
Right.
Automated decisions. So,
yeah. I got a great investment strategy. I just noticed it.
I'm listening. I'm ready. What's our hot
buy
stock?
Low, buy low, sell high.
Oh,
Yeah.
Okay.
Yeah.
All right.
So all I need is a crystal ball that tells me it's going to go up or it's going to go down.
Right.
These are my crystal balls right here, although I can't tell you from day to day where we're going to go inside of that crystal ball.
See, get back to me when you can do that. That's going to be worth a lot more. We should make a company based on it.
Yeah, if I can do that, then I will retire to Hawaii. Oh, wait a minute. I'm already in Hawaii.
Oh, you'll just retire where you're currently living.
No, I'll buy a bigger house. How about that?
You'll buy a bigger house and then retire where you're currently living.
Exactly. There we go.
Oh, well, we'll get to that. We'll get to that after the show.
So I don't know where we're at on time. Hey, timekeeper, how are we doing?
We should be done. But
it's
been such a great episode. I was letting it roll.
Okay, well, what is it we say at the beginning of this show?
We are not financial advisors. Every word we say is the opposite of financial advice and should be completely disregarded.
Yes, totally. So with that, I'm glad everybody who watched this wasted their time to get to the end to know that they shouldn't do any of this stuff.
As aforementioned, talk to your doctor to see if you're healthy enough if you're wealthy enough for Romberg.
Well, yeah, maybe that's a great one. Wealthy enough for Romberg. There you go.
Please speak to your financial advisor to see if you are wealthy enough for Romberg. That'll be our new credit reel.
Okay. All right, man. Well, I will
good
chat
stuff.
again next Friday.
Looking forward to our next Red Week, and I'll see you next Friday.
All right, bye.
Bye.